I'm going to show you two confluences that I look for whenever I want to take an entry, or you can call it confirmation or confluence, whatever you want to call it. I'm going to be showing you two confluences that I look for whenever I want to enter a trade. But before going into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you mindset behind my strategy. If you're not particularly like this, I want you to smash the subscribe button. I'll be right back. For me to show you these two entries that I normally use to enter a trade, I'm simply going to be analyzing USDJPY from the higher time frame down to lower time frame where I often take my entry. The higher time frame is for analysis, while lower time frame is simply for entries, and it's at the point of entry that I'm likely going to identify those confirmations that I'm looking for before I enter a particular trade. So what I'm basically going to do is this. I'm simply going to go to the daily time frame, which I use as the higher time frame for me to understand where market is going to, and as well identify the key levels in the market, right? Now, on daily time frame, I simply want to understand what price is doing and where price is heading to. And if I'm to do that, I want to simply use my trend line to understand where the support is and where the resistance is. Now, clearly looking at this point here, you can clearly see that this point is a point of support, right? Point of support, and here is simply the resistance, right? So basically, if you have to interpret the trend now, you can clearly see that price is an uptrend, but price broke below the trend, right? The trend is saying that we're an uptrend, but currently price has broken below the trend. What we want to do now is to understand where the key levels are. And for us to identify the key levels, we want to first of all identify this point that price broke below the trend. This is our key level here. We also want to identify where price got to after price broke below the trend, which is at this point here, right? These are the key levels I'm identifying right now. And I also want to understand where price was or where price got to first before price actually broke the trend. This is here. So these 3 points now are simply my key levels, and the whole idea here is to understand how price moved from every key level to the next key level and understand what we're going to do next. Let me remove all this support and resistance we drew earlier on, right? So basically, my interest now or my concern is simply what price did from this point to this point and from this point to this point. Then I can be able to understand what to do next or where to go from here. And I want to simply understand that by simply understanding market structure, what structure the price creates, and I want to identify that on the 4 hours time frame, right? So basically, now I'm going to go to the 4 hours time frame. Remember, on the 4 hours time frame, we are looking for two things: market structure and most importantly, supply and demand. We're looking for two things: market structure and most importantly, supply and demand. And how do we identify that? By simply studying how price moved from this point to this point and from this point to this point, right? Now, if you are to understand it, if you are to understand the structure on this point, now you can clearly see that price is giving us lower lows and lower highs, right? This is a low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. So price is simply giving us lower lows and lower high. So what I want to do next now is to understand where the supply and demand zones are. And for this trend right now, we can simply be able to identify supply zones. And this is our first point of supply zone here. This is the first supply zone that price gave us. Why? Because at this point, price dropped, price dropped, price based, price dropped. So drop based drop is simply a supply zone. And you can see price came up to this point and gave us another drop, base, drop. So this point again is also a supply zone, right? This zone is also a supply zone. And that point again, we can identify supply zone is simply here: drop, base, drop. So this point again as well too is also a supply zone. Now, let me give you a recap of what we did earlier on. On daily time frame, we understood where price was going to and identify the key levels. So two things on daily time frame: the key levels and most importantly, where price is going to. Now on the 4 hour time frame, we identify the structure, that is market structure, and most importantly, supply and demand. Now we're going to go to the 1 hour time frame and understand how we're going to refine these zones to become point of interest. We're simply going to be refining these zones to become what? Point of interest. Then we can be able to identify liquidity, right? That'll be happening on the 1 hour time frame. Now, the first point we're going to refine is simply the recent supply zone here, and this is it. So if I define the supply zone now, you simply say at this point here is basically the point of interest, right? This is our point of interest. And if I have to define this one, you can also see that this point here is also our point of interest, right? This point is our point of interest. And if I have to define this bigger one here, you can clearly see that this is our point of interest. Now, having refined these zones, now I want to understand how price is behaving at every of these zones to know where the liquidity is and possibly know the point of interest that's going to hold. So our aim now is to understand what point of interest is going to hold the market for itself, right? And now if you look closely, we want to understand that we want to make sure that we see liquidity below the point of interest before we can say, okay, it's going to hold or it's not going to hold. And now if you look close at this point here, we cannot clearly see any liquidity at this point that price is going to use to hold this demand, this supply zone here. So chances are that this supply zone is not going to hold, and this supply zone must simply be act as a liquidity to trigger the next supply zone. So basically, an entry on this trade now is to understand that this supply zone here is not going to hold. Why? Because price have not induced a liquidity below this point to hold this supply zone. So what price is going to do next is simply to use this supply zone here as a fuel or as a liquidity to trigger the next supply zone, which is this point here. So an entry on this trade now is to simply understand that this our first confirmation here is for price to use this one to act as a liquidity to trigger this one for a sell. So basically, people who are selling at this point are going to be putting the surplus at this point here, right? People who are selling from the supply zone will be looking to put their stop losses above this place, and price might use all of these things as a fuel to trigger the next zone here, right? So our first confirmation is to understand what liquidity is, and how to understand what liquidity is. What we want to do now is to understand that our entry for us is to simply wait for price to simply come back to this zone and then give us a change of character for a sell, right? So basically, our first confirmation is to understand where the liquidity is. And obviously, we have identified that this supply zone that we saw earlier on is going to act as a liquidity for the next supply zone. First entry or first confirmation. Now, second confirmation is this. If price gets to this point where liquidity is here, what I want to see price do is this. Where's my brush? What I want to see price do is this. If price gets to this point, I want price to simply keep giving us higher highs and higher lows until price take out this liquidity and then change character. Now, where did the change of character occur? When price took out this low that is here, this low, right? So when this occur, I want to simply see price give me a little retracement. Where's my brush? A little retracement to the upside at this point. At this point here, and then I'm going to enter for a what? A sell to this point here. Do you understand? So these are the two conditions I look for. First of all, is to identify what liquidity is, and then if price gets to the point of liquidity, I want to see price give me a change of character for a continuous sell. And I'm likely going to take in this trade, right? I'm going to simply wait for price to come back to this my zone here for a short. And I'm possibly going to put in my entry at this point here, and I'm going to target in this place as my TP1 and possibly here as my stop loss. So this is a very good entry for me that I'm going to take in come this week, or if price give me opportunity to take this trade, I'm going to take in this trade as I've analyzed it on this pair. But if you're going to copy the trade with me, I want you to also bear in mind that chance either is not going to hold, and the only way you can get saved, that's the right word to use, is to apply a very good risk management. If you apply a very good risk management, you're going to make money from this trade, right? So basically, the two entry convention I'm looking for is to first of all get liquidity. Secondly, look for a change of character
on the lower time frame, and this kind of pattern often will occur on the say 15 minutes time frame or 5 minutes time frame, depending on how price moves. I think this will be all for this video. I'm going to see you on the next one.